Hey guys, it's Carter, and today we are talking about gold. Gold has been surging lately to new all-time highs. It is now even past $3,000 USD per ounce, like we predicted on this channel months ago. But I have some bad news about gold because I think it is closer to the end of this bull market than you may think. So, in the coming weeks, I'm going to show you my targets for then. I'm going to show you my targets for the coming weeks, but in the coming months and year, not a pretty outlook on gold, and I'm going to show you exactly why. Now, a lot of people are also thinking online that it is a great time to start transferring those gold profits into silver because that is going to start to rapidly outpace gold. I don't believe that's the case. I don't think gold is going to be getting weaker against silver anytime soon. I'm going to show you why I believe that, and we're going to just jump right into the charts like we always do on this channel. Roll the intro, roll the charts. All right, so here we are on the daily chart of gold. It is currently at 2,985 US dollars. We're then going to go look at the monthly chart of gold, spend a little more time there, and then finish this video off looking at the gold to silver ratio. But here on the daily chart, I want to show you one thing and one thing only, that the trend locally here is up, and it has been for a while, and it can continue to be up in the weeks and months to come, provided we hold this trend line down here. So we cannot drop below 2,750 with the sustained break and still be in a healthy move to the upside, in my opinion. However, as long as we're holding this ascending trend line on the daily chart, we can continue to look for higher prices on gold. Now, let's head our way over to the monthly chart to discuss how high I think gold could potentially go in the weeks and months to come. All right, so here's gold's monthly chart. Let's take a look at our indicators. So at the bottom of the screen here, we have the RSI. This measures our strength, and you can see where we're at right now. Extremely overbought. We're at 81 on the RSI here. The last time this chart was this overbought, right here, and look where we were in price. We were at the top of this long extending parallel channel, so it cuts through this high here when we were extremely overbought, and it is just above our heads, and we're once again extremely overbought. Now, the last time we were this extremely overbought on the RSI, we were at the top of this parallel channel and then proceeded to fall in a three-wave decline. This is likely an A, B, C correction here, classic, and took us to the bottom of this parallel channel. 2 years, 22% decline. Now, like I said, this parallel channel is above our heads, so I still think it is possible we head a little bit higher before we see a pullback, but we are very close to seeing a pullback if history is going to repeat, like it always seems to do on charts like this. Now let's look at the stochastic RSI. This is a measure of momentum, and interestingly enough, in this bull move here in price, look how the stochastic RSI acted. We had two little movements down towards the 80 level on the stochastic RSI, ultimately got saved both times, and then the third time we came down here, we crashed hard on our momentum, and that's when the decline started here. Now, present day, during this bull move, what do we notice on the stochastic RSI? A first move down to the 80 and a second move down to the 80. The next cross down on the stochastic RSI, which could come in the coming months, could lead to a crash in our momentum and the start of this decline down here. So we have two indicators here, our strength and momentum, that say that momentum is getting weaker and strength is as well. We're incredibly overbought, and there's a slight divergence right here in our strength. We had a high and a lower high right here, and a high and a higher high in price. So our indicators are starting to move to the downside slowly, but price is still rampaging to the upside. That is a sign of exhaustion. And volume heading down in the previous months confirms that as well. Now, let me be very clear. I did show you that daily chart ascending support for a reason. We hold 2,750 and that ascending support line. I believe the path of least resistance is currently still towards the upside. So where am I targeting in the coming weeks? Well, as I believe we're in the third wave of this 5-wave move to the upside, we can take our 1-2 setup right here and project some targets here with our extensions. And if we zoom in, we can see that we're at the 2.618 length of that first wave already. I think we have the possibility to extend towards this 3 level up here as well. So in this box, towards 3150, I believe we could head to before we see a further decline. So in the coming weeks and months on gold, I am going to be looking for some weakness here around 3150 at the top of this parallel channel. So I'm going to be looking for a wick that possibly extends much higher than 3150 and then a close back around this top of the channel. I'm going to be looking for price action cues to signal that a top has likely formed. We are not jumping to conclusions that a top has formed just because our indicators say we're overextended and that there's potential resistance above our head at 3150. We are waiting for price action to give us that cue up here as well. All right, so I'm now going to show you why I'm in absolutely no rush to be buying silver right now, despite me thinking that gold is at a multi-year top potentially very shortly. So look at this chart right here. This is the gold to silver ratio at 88. So that means it takes 88 silver ounces to have 1 gold ounce. And you can see that it's at a historically high level. This is only extending back to 1998, but it's historically high. I don't have a chart that goes further back, but regardless, you can see how high it is at 88. Historically, it's a lot lower, but it is in an uptrend, and the trend is your friend until it ends. So until we head below this ascending support line here, I'm in absolutely no rush. This is at around 78 right now. And actually, I think this is going to continue to extend higher in the next year or year and a half, as the fluctuations on this chart don't look primed for a big drop to the downside right now. All right, so why do I believe that we're not ready to see this move to the downside just yet? Well, because here on this chart, although we saw a nice move down from around 127 to around 62, we followed that up with a small 5-wave move up, and then followed that up with a 3-wave decline. Now, what this means is that we saw a 5-wave move up, which leaves the door open to more upside. And we've also seen a 3-wave move down, which further leaves the door open for more upside. So the more probable path, because we're in an uptrend here, we saw an impulsive move to the upside, followed by a corrective move to the downside, means that we're likely going to see further upside rather than a big drop to the downside in the weeks and months to come here on the gold-silver ratio. So based on these moves we've seen on this chart since 2020, I would not be surprised if this ratio actually heads back up towards this range right here. And this range falls between 106 and 127. So a move back up towards this range would be likely in the months to come. So to conclude this video, to wrap it all up, I believe that gold's path of least resistance is still towards the upside in the coming weeks and months, provided we can hold that ascending support on the daily chart that is currently at 2750. And I believe we can target 3150 or even a little bit higher than that on gold in the coming weeks and months. But I ultimately do believe that gold is close to a year to multi-year long top before we see a move to the downside. More on where I think that move to the downside could take us in a future video. And I ultimately don't believe that silver is going to be outpacing gold in this correction that gold is about to see. I think silver is going to fall harder and faster than gold is about to fall. All right, that's all I have on gold. That's all I have on the gold-silver ratio. I hope you liked the video. Have a good one. Stay safe in the markets.